everybody. I'm Tasha from the Major Change Group, where we believe small changes can create big results. And today I have a special guest. I have Tate from the number one student loan channel, and he is going to be answering, and we're going to be talking about where he had one of his clients had $187,000 in private student loans, and he was able to settle it at $50,000. And we want to talk about, okay, does he think that Biden is going to forgive $10,000 in student loans? And just overall thoughts on defaulted student loans and private loans as well. So I'm going to bring Tate on, and we're going to get into these questions. Hi, Tate. How are you doing today?
Chilling. What's good with you? How you doing?
Good. Thank you so much for joining. And when I came across your content, and I saw this video where you were talking about a young lady had 187,000 in student loans, and you got it settled for 50. I said I had to contact you and talk to you because I like talking about student loans on my channel. But before we get started, can you tell us about yourself and how did you proclaim yourself as the number one student loan lawyer?
I think you can just claim yourself as anything you want. I mean, but from my perspective, I've been doing student loan law since 2014. And student loan law, all it really means is I understand all the rules and regulations for federal student loans, private student loans, and kind of how they work in solving problems for borrowers. And then when I was sitting there looking for a YouTube channel name, I was like, you know what, this is what I'll roll with. And it kind of worked out for me. So that's been the case there.
So cool. Now, how did you settle, $87,000 in private student loans to $50,000? I want to just jump right into that before we get into a lot of questions, because this is huge, especially with private student loans. A lot of times, people think that I really think that those are the worst to have myself. And you usually think that you can't get out of it, but to be able to settle over 125,000. Tell us about that.
With private student loans, they come with their negatives, which is they don't offer income-driven repayment, things like that. So you get out of college, you may not be in a position where you can pay back the loan according to the terms that they want, which is they want that payment schedule as is. And so the best thing you can do is ask for let me go ahead and get some type of interest-only payments or something like that. But those are temporary, right? And at a certain point, you run out of those, and then what do you do? And that was my client's case, where she had the loans, graduated, and wasn't making the income that she needed to be able to take care of herself, plus pay off her federal student loans and pay off her private student loans. And so she got some advice to file a Chapter 13 bankruptcy, and that bought her some time, where she had 5 years where she didn't have any payments on the loans, or the payments were managed. But then when she got out of the bankruptcy, the student loans were still there. And she had to deal with them, and that's when she reached out to me. She was like, okay, what do I do? And we were prepared to go back and reopen her bankruptcy to file what we call an adversary proceeding. And all it really is it's like a lawsuit inside of bankruptcy, where you say, I should be able to get rid of my loans because they are an undue hardship to me. I can't pay them back and maintain a minimal standard of living. So that's what we were going to do. And I was like, you know what, before I do that, let me reach out to the creditor and see kind of what settlement offers we may be able to get. And some back and forth happened, where we just kind of talked and kind of went over her numbers about where she was at budget-wise and what she can afford. And they went ahead and agreed to the settlement offer I presented of the $50,000. And the crazy thing is, she actually didn't have that money lying around, right? She didn't have that type of money. But what ended up happening was, she went out and got a personal loan approved. And this is 2 years after bankruptcy. She was still able to get a personal loan approved for that money to go ahead and pay towards that settlement. And now she no longer has a student loan debt hanging over her head, and she saved, upwards of $130,000. And now all she has left is this loan to pay off, and its favorable terms. So it worked out for her. It was a huge win, and I was really happy for her.
That is amazing because, yes, that's what I was going to ask. Because typically, you usually think, okay, if I'm going to call them to do a settlement, especially for $50,000, you usually think, okay, do I have to have the $50,000 lying around? But what you're saying is that you don't have to do it and you're able to maybe get you another loan. But at that point, wouldn't you have to have good credit to get a $50,000 personal loan?
Yeah, I mean, absolutely. You got to have some type of credit to get it. And I want to make sure I'm backing up. Um, Not all settlements are going to be for a lump sum. I have some where they're going to be monthly payments over a 1 year, 2 year, maybe three, maybe 4 year period. So you don't
Mhm.
necessarily need to have lump sum, and it changes from creditor to creditor. So like Discover may be different than Wells Fargo, may be different from Chase, may be different from Navient. So they all have their different kind of like protocols they have set up for settlements. And you have to figure those out and kind of know what is doable in advance. Like the other day, I settled with one company where the lady owed 135 and we settled for 35,000, and
Wow.
she has until 2025 to pay it off. And
Ooh.
so these are the type of things you can get done, but these can only happen after you default on a loan. So if you're still
Okay.
like making payments, you're on an interest rate only plan, and you're making those payments, then you're not going to be able to get a settlement. It's only after you default that settlement potentially becomes an option from that standpoint.
Okay. And so that kind of goes into my second question because I wanted to know, okay, how do you get out of default? But what you're saying to get the settlement, you really should go into default. So that's kind of the opposite of what most people, what I would think.
Yeah, I mean, should is a it's not what I would say. I'm not an advocate for violating your contract, but if you're in a position where you can't pay and you eventually default, then with private student loans, you may be able to get a substantial savings on your loan at that point. But that comes at a
Mm.
cost. That's going to come at the cost of your credit score and the credit score of your cosigner, if you have one, on your private student
Oh.
loans. And that's a tough conversation because people are like, they really worry about their credit scores. And the way I think about it is a little bit different. I said, tell me when are you going to have an opportunity to save $100,000, right? So your
Hmm.
score, you may jeopardize your score for a year period, but then you can rebuild that quite quickly afterwards, and now you are debt free and having saved all that money, or at least debt free from the student loans because you've paid those off. So I look at credit a little bit differently. Credit scores are, you can manipulate them, you can do things to rebuild them quite quickly, but there are very few things you can do to get out of your student loan debt as quickly.
Okay, and that kind of takes me into the fourth question. Usually with private student loans, and let's say a cosigner, is there a way, how do you suggest going about getting off as a cosigner? So let's say you have a grandma, she co-signed for her grandson, and then the grandson is, he's not paying the student loans on time, and it's impacting their credit. But how can the grandma get the son off? Well, how can the son get the grandma off of the student loans as a cosigner for private student loans?
Yeah, and so that's going to be difficult if the person has already missed payments and is already on an interest rate only plan. So typically, to get a cosigner release, you have to make the payments as agreed according to that contract for a 12, 24-month period. And then you apply for a cosigner release. And if that the primary borrower has a good credit score, stable income, and can qualify on a loan on their own at that time, then potentially you can have the cosigner released. Now, every private student loan has its own rules for this, so you need to check there. But
Right.
again, this only works if the person's making payments as agreed. And
Hmm.
but if they miss payments, and they've already defaulted, then there's no way to get you released because you're the whole protection for the default at the time, the cosigner, because that's what you did. You said, hey, if this person don't pay, I'm going to step up and pay. And people don't look at it like that. They're like, oh, it's just a signature. They're just using my credit. No, you're legally obligated to pay back this debt, and you could be frustrated as you want. You could be as frustrated as you want with this grandchild or whatever, but that doesn't change your legal obligation on the loan. And then
Wow.
that's when they're like, okay, so what do I do? I'm like, you may be looking to negotiate a settlement with that so you can get it off the loan and move on, because all these hurt feelings and awkward Thanksgiving dinners with family members, it ain't gonna change the net and the end result, which is you're legally obligated on this debt.
Right, but in the instance of a cosigner on private loans, if they settle, that's going to impact the grandson and the grandma, right?
Exactly. So it solves the problem for both people at that point. Now there are times where you can like say, okay, look, I just want to pay enough to get me off the loan. And some places do that. They'll say, okay, you pay X, we'll release you as the cosigner and just go after the primary borrower. But that's kind of like that usually isn't the best solution for all parties involved.
Okay.
So you usually want to just settle and to be done for everybody at that point.
Mm, okay. Wow. I think that is a great question because, with the private student loans, it's just, usually the cosigner is usually in a better position than the person that actually borrowed the money. And so,
Maybe, and that's when initially, right when you're a college age and you're using grandma's credit to go ahead and get it. Sure, she's in a better position from a credit score standpoint. She may not be in a great financial position where you done went down to Clark Atlanta and you done racked up 150,000 in student loans, and grandma's on Social Security. She owned a house, but she don't really have no income coming in. So
right.
yeah, she's in better position on her credit score, but her ability to pay back the loan, that ain't the same, and she's banking on you to make that income. But like a lot of times it takes people a few years after graduating to get on their feet where they can actually dedicate 1,000, 1,500 towards paying back their private student loans each month.
Okay. Now, let me ask you this question in relation to student loans and your credit score, because I did a video the other day, and today somebody made a comment because I said I don't think that federal student loans should be on your credit. They shouldn't be reported to your credit report. Now, private student loans, I think they should be reported to your credit report because you have to be approved and you have to have decent credit to get the private loans. But for federal loans, when you're getting into school and you do your FAFSA, they're not checking your credit for you to get that $50,000 a year for your student loans. What are kind of your thoughts about that?
So, from my standpoint, I don't see why you wouldn't want your federal student loans on your credit report because, like, the thing is, for people who care about credit scores, right, they're trying to do these things to show a good mix of different types of credit with a
Okay.
lengthy payment history that they're paying back in order to increase their score, right? You're going to have
Right.
your car loan, your mortgage, your credit cards, your store cards, right? But then your federal student loan, that's going to often be one of the oldest trade lines, one of the oldest debts you have with the
Right.
payment history. And so that can be super valuable to people. It can also tank your score if you don't properly manage it, but that's like any
Right.
other debt, right? And so, from my standpoint, I don't see why you wouldn't want to have it on your credit score
Mm-hmm.
because it usually is going to be one of your oldest trade lines, and it's also going to be an installment loan that is going
Mm-hmm.
to be a good mix for people to pay it back.
But like when I purchased my house in 2007, you when they did your underwriting and stuff, they didn't use your student loans. But now when people are trying to get a student loan, I mean now when people are trying to get a house, they actually in your what is it called?
Debt to income
Your debt
ratio.
ratio, they're going to add your student loans. And sometimes that can mess people up, in my opinion, when they're trying to get a house. What are your thoughts?
All right, so I understand what you're saying about the credit, but that's actually a different issue. And what you're talking about here is how student loans are being calculated into debt to income ratio. So a lot of
Hmm.
times people are going to go in, they're going to be a first time home buyer. They're going to use like a FHA loan program. That's going to be one of the most common loan vehicles. The problem
Okay.
with the FHA loan program is the way they calculate your student loan payment is they'll take 1% of your overall balance. So if you owe 200,000, they're going to factor in $2,000 into your monthly debt to income ratio. And that
Mhm.
blows a lot of people's debt to income ratio up. But
Right.
that's a rule that FHA uses. They don't have to use that. They could use your income based repayment if the rules were to be changed. So I think the
Okay.
better argument is to say, hey, because like Fannie Mae will use your payment on your credit report. VA will use your
Mhm.
payment on your credit report, so long as that payment, like for some of them, it's like so long as it's not zero. So if it's like $5, they'll use that and factor into your debt to income ratio. So we're talking about differently is maybe we need to change the rules for for FHA so they're not
Mhm.
factoring the 1% into your debt to income ratio. Now
Okay.
that said, with FHA, there's a workaround. A lot of times, people they're in an income driven repayment plan on their federal loans, and what we
Mhm.
have to do is switch them out of an income driven repayment temporarily into a payment that pays off their loan over time. So it moves into like a 30-year loan. They get that monthly payment, use that for qualifying for the home, get the mortgage, be done, and then switch back into an income based repayment plan. So that's the
Oh.
workaround you can do to qualify. So I get people that are like, oh, I owe 200 loans, I can never buy a home. No, that's usually not true. You
Okay.
usually can get a home. And if you can't get a home, a lot of times what I see the issue is that your income isn't enough for where you're trying to buy a home at or how much
Okay.
house you're trying to buy.
Right. Okay. Thank you. That is a good one. Now, recently, I did a video, and I think you did a video about Biden. He forgave 1 billion in student loans, but under the Corinthian colleges, so there was an umbrella of colleges that had some scams. The universities or the colleges were closing. Now, what if there's somebody that maybe went to that school and wasn't in that 1 billion of forgiveness? What advice would you give them to possibly get in that group?
I think what you'd want to do is apply for the Borrower Defense to Repayment program. So that you should have been pre-identified already because this $1 billion forgiveness, this kind of went back to 2015 when it first
Right.
happened, and it's been
Mm-hmm.
just stretched out with litigation and all type of stuff. But if you feel like you qualified and then weren't necessarily counted, then you'd want to submit a borrower defense to repayment application. And you could do that easily on Google. Just put it in borrower defense to repayment. Boom. It's an electronic application with the studentaid.gov website and with
Mm-hmm.
Department of Education. Fill it out and then they'll process it accordingly.
Okay. Yeah, because I did have one comment on that video, and she asked how would she be able to do it because I guess she went to the college around that time. And so I most definitely am going to reply to her and let her know what to do. The next question, this is around the public student loan forgiveness. When should you apply for the public student loan forgiveness? Should you apply as soon as possible or when you get close to that 10-year mark?
All right. So we need to kind of break this apart. So there's applying for the forgiveness, saying, hey, I meet all the requirements, go ahead and grant me forgiveness. And then there's certification. And
Right.
certification, we typically, we with my clients, we do it on a yearly basis. And what we do is there's the employment certification form where you say, hey, I've worked full time for a public service job for the government or a nonprofit for this time period. And we do that every year to turn in that paperwork. So then at the end of 10 years or 120 monthly payments, we have evidence from year to year to year showing that you met the requirements for the work requirements. So then when
Mm.
you go to apply for public service loan forgiveness, then you have this record of evidence on your side that says, I've met all the requirements, give me my forgiveness. And so when should you apply? You apply after you make your 120th payment. When
Okay.
should you certify? I think you should certify every single year. And then that's just simple. Just put in public service employment certification form. Boom, pops up. Take that into your HR. Have them sign off on it. You fill out the first page and then the second page, and you're done. Send it to your servicer.
Okay. Now, sometimes I hear what is the percentage of people that get approved for these types of forgiveness?
Well, so there's a lot of people who submitted applications that thought they met the requirements but did not. They assumed, oh, I work for the government, I qualify. That's not enough. They're like, oh, I made 120 payments. No, that's not enough either. So there are very specific requirements. And so the vast majority of people submitted applications were denied, but a lot of that was because they didn't meet the requirements. They relied on their servicer that told them, oh, you're good. Or they're like, oh, I told my servicer I work for the government, so they knew. Well, that's not enough, and it should be, right? It should be enough that you don't have to do all these extra hurdles, but ain't nobody going to give you nothing. You got to work for it. You got to make sure you meet the requirements. You got to take those
Right.
loans into your own hands and say, okay, I meet them. So let's talk about the requirements. Number one, you have to have direct loans. So people think federal loans, oh, I got federal loans. No, there's a subset of federal loans called direct loans. You have to
Mm-hmm.
have those. Now, how do you find out what type of loans you got? You can call your servicer or you can go to studentaid.gov and look at your loans. And you want to look for loans that say direct in them. So they'll say direct consolidation subsidized, direct unsubsidized, right? And once you see that, you're good. Direct loans, number one requirement. Number two, you got to work full time, right? So full time is going to be like what your job costs full time, or at least an average of 32 hours a week. Number
Okay.
three, number three, you got to work for the government or a qualifying nonprofit. So if you work for the state, city, federal government, cool. You work for a 501c3, cool. You qualify. The fourth thing is you have to make payments under an income driven repayment plan. So you
Hmm.
can't be under an extended plan and graduate plan. You got to be in IBR, revised pay as you earn, income contingent repayment. Those are the plans you got to be in. And then the
Mm.
last thing is you have to make 120 qualifying payments. So that means you got to make those payments on time. So the due date is the 10th. You need to make your payment on or near the 10th because it has to be made within like I think 15 days of the due date. So
Okay.
a lot of times people are like, "Oh, I thought I was good," and what happened is they're like, "Oh, I'm just going to pay it in advance," and then when you pay in advance, you throw off your whole payment date, and then you mess yourself up. Or they were in the wrong repayment plan to start, or they had the wrong loan. So you had so many people they thought they were good, but they didn't meet those five requirements: right
Hmm.
loan, right job, full time, right repayment plan, right number of payments.
Wow, you dropping gems because it's like on the one hand, it kind of gets a bad rap because you think they're just denying people, but you're stating it's a lot that goes into it.
It is. So like we like to blame other people and the program should be designed differently. I'm not debating that with anyone. But the rules were laid out and a lot of us we just rely on when we call our servicer. Remember,
Mm.
Fed Loan don't work for you. Navient Great Lakes, they don't work for you. Their employer, the person who cuts them their check, is the Department of Education, right? So they're not going to look out for your best interest. You got to look out for your own, or you hire someone to look out for your own.
Right. Okay. I like that. That is a very good question. Now, speaking of forgiving student loans, earlier this year, we were thinking that Biden was going to forgive in 2021 maybe 50,000 in student loans, but really it was the Senate Democrats that were pushing Biden to do that. But here recently, Biden said, no, I didn't say I was ever going to do that. And so he's still on the 10,000 mark. What are your thoughts? Do you think that we'll see $10,000 in student forgiveness in the near future?
I honestly don't know. I think there's going to be something. I think it's going to be less. Whatever it is going to be less than what people think, and it's going to
Mm-hmm.
come with these financial caps. Like they're saying, okay, there's going to be like household income cap or whatever. I think that's the case because we're talking about $1.7 trillion of student loan debt, and you can make all the arguments to say, oh, we bail out these banks, we bail out that. It is
That's mine.
fundamentally,
That's what
yeah,
I say.
it is fundamentally different to middle Americans that you're bailing out your neighbor versus you're bailing out a corporation, right? We bail out farmers all the time. We don't think nothing of it. But when it comes to bailing out your neighbor, people are like, no, 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 we can't do that, right? So I think you're going to have a tough time getting elected officials, your congressperson, to pass widespread, massive student loan forgiveness. That said, could I see something along the lines of Biden via an executive order doing $10,000? Sure.
Mhm.
I doubt that he wants to do that, and he'd rather let Congress do it because you don't want to use the executive order to control the purse of Congress, right? Like to say how Congress is going to spend its money. And there's arguments to say that's not what's actually going on, whatever. But basically, he's saying, look, if we're going to do any forgiveness, let Congress do it.
Mhm.
And that makes sense to me because he doesn't want to extend that authority. It also allows him to pass the buck and say, I put this on y'all. And so if y'all gonna
Right.
do it, cool, I'm with it. I'll sign it, but you got to get the support for it. And I just think
Okay.
you're going to have a hard time, even with not just Republicans, you're going to have some moderate Democrats who represent districts where their constituents aren't in favor of forgiving student loans because they're like, hey, I paid back my loans. You need to pay back yours.
Mhm. Yeah. And even though when I'm talking about student loans, I definitely think that they should forgive some, but on the same hand, I got the student loans, I pay my student loans. I haven't had a problem with student loans. So by me talking about that topic, I'm just kind of, when I read the articles and stuff, I'm really just kind of talking about it. But on my own personal, I have no problems with it. But on the same hand, with a lot of people defaulting on student loans, there's a lot of things with the actual student loans that I think it just needs to be changed, with the consumer protections, maybe the interest. I think there are some other things that we could possibly do before they eliminate 10,000 or 50, but of course I would take it, but there are some
No,
things.
yeah, there's definitely something else to be done that's not just that. So if you reduce the interest rate down to 1%, right, or
Mhm.
whatever, that's going to save people a lot of money as well, right? Because some of these interest rates are 6.7, eight point
Right.
seven percent on federal
Mhm.
student loans. So if you say, okay, we're gonna change the interest rate on these contracts down here, or we're going to waive the interest. We're gonna allow people a one-time opportunity to pay back their original principal balance. There's gonna be a lot of people that sign
Mm,
up to do
I
that,
like
right?
it.
Or
I like it.
if we change the rules for bankruptcy to make the standard for discharging student loans in bankruptcy a lot clearer instead of relying on these vague tests. So there's these host of things we can do that don't necessarily um, add up to student loan forgiveness, but do equal relief. But if we think about it, right, for the most part, there are a huge swatch of people who owe massive amounts of student loan debt, and they're on an income-based repayment plan where they're paying back like $200 a month, and the
Mm,
interest scares them. But really, what they care about is, can I buy a home? Can I get a car? Can I get
right.
all the things I need to live my life? And if that balance keeps growing, yeah, it's scary, but I got all the things I need. And
Mm,
so there's a lot of people like this. So if we're going to change things, I think we can change the rules to qualify for FHA loan, and that gives people closer to the American dream, right?
right.
Now you're still shackled with the student loan debt, which is scary as hell.
Yeah.
But but you don't necessarily need to get forgiveness to get the things you want in life.
hmm I would say the main things is just making sure that it's current and that you're in good standings. That's the main thing. Okay, my last question is, because we're talking a lot, and most of the time, the people that you see, they're already having these student loan issues. So, all the people that you have seen over the years, what advice would you give, let's say, to a graduating high schooler? Okay, what should they think about when they're getting those student loans so that they don't end up coming and talking to you about default and all that kind of stuff?
It's it's tough because like what do you tell a 17, 18-year-old about what it's like to be 30? You know what I mean? With student loans, right? Like,
Right.
it doesn't matter to you until it actually matters. But if you're saying,
Mhm.
like, how do I set myself up for success? Number one, you don't need to go to that school you think you need to go to. So
Mm.
you want the greatest return on your investment, right?
Right.
So like you need to investigate, what is it that I want to do? Is this school going to help me get there? But that's hard to say when you're 18 years old and you have no clue what the hell you're doing to be that intentional. But, so the student loans, you just want to go to some place where, you're going to have a good shot at getting the education you need in order to give you the economic opportunities you need to go
Mhm.
ahead and be able to pay back those loans. But I'll say for like any graduating senior, you really want to understand who has my loans, what are my payment options, what are my interest rates, and then what are
Mm.
my options to get me through this first year. Because for a lot of people, especially people of color, that first year after graduating, it ain't like you going back home to stay with your mama. And a lot of times you're like, look, I need to figure this shit out because I can't go back home, right? And so you got to be able to take care of yourself. And so you need to be able to take care of yourself while repaying your student loan debt. So what are my options to protect myself while I build up my emergency fund, my living fund, and all this other stuff? So those are things you really want to understand: who has your loans, where they're at, what your interest rate is, and what your repayment options are. Once you have the loans, before you have the loans, you just want to make a better choice. You may
Mhm.
not need to go to that school, and it's hard to say when you're staring at like a Morehouse, and which is a wonderful institution, right? That shapes men, but also comes with a hefty ass price tag.
Right.
It's not the same as going to community college, never will be. So you're paying for something, but you got to hope that on the back end you do everything that's necessary to maximize that return on investment.
That is some great advice. And Tate, I mean, I could just ask you tons and tons more questions, but I definitely thank you so much for coming and talking to us. But if anybody listening and watching wants to get in contact with you, where can they get in contact with you at?
Man, you can find me all across the web, tateesq.com. That's TATEESQ.com. People can sign up for a free 10-minute phone call. I'll listen, try to figure out how I can help you. And then if I can, I'm going to say, okay, here's what we need to do, and go ahead and schedule a follow up from there. So, really easy to work with me.
Most definitely. And I'm also going to link your YouTube channel in the description along with your information, because you guys have to go over to his channel because he really breaks it down. He has a lot of good advice. And yes, any last words before we go?
Nah, yo, I guess yes. Stay safe, get vaccinated.
Okay. All right. Well, thank you guys so much for watching. And until next time, have a good one. Bye.